Hi, this is Randy Finney with the Right Side of the Chart, and this is a closing market wrap for Thursday, December 19th, 2019. Skipped the last couple days. We haven't had any new reactions. Same story. The market continues to grind, a slow grind higher without any real significant technical developments now for well over a week. So when you have this low volatility, low price compression, we're moving up usually well under, a percent a day here. There's just not a lot to report. So what I will do is a recap. I haven't done one in a while. Members, this is really largely a follow-up to the video I did earlier today, except in that one I covered all other asset classes, treasury bonds. I hit on currencies, US dollar, the euro, 10 and 10 and 30-year treasury bonds, gold, silver, palladium, and natural gas, crude oil, and a couple trade ideas and some things to note, including Tesla. So other than that, it was mostly an asset allocation video talking about the various asset classes. And I'm going to cover just the equity analysis part on that. So where we're at is, again, not any new technical developments, but especially on the daily and weekly longer term charts. We had that double top, not double top, but a two highs there around 302.50 on SPY. And so it's the same story for months now, going all the way back to July. That's where the previous highs were at. We finally broke out of that high, that 302-ish level back here on about late October, early November, right around the end of October. And we've made so far a marginal new high. We're up a little under 6%, I believe, since the market broke out to new highs. Kind of, like I said, grinding higher. Divergence is still intact on all time frames, daily, weekly chart. And so we don't have anything remotely close to sell signals. The closest thing we had those short-term sell signals triggered back here a couple weeks ago, and we had those 60-minute bear flag patterns play out perfectly on the index futures. And so what I showed today, starting with this morning, are these 60-minute trend lines, small wedges that we're looking at and monitoring here. So I'm going to move these divergence lines. What we have is potential divergence here. I say potential divergence right now. The indicators are still moving up. The trend is up. But this, to me, is the most important thing. I'm watching these trend lines right here. They come off the early December lows. And at very minimum, we're looking at pullback. There's a gap to be backfilled right here. Friday's gap right there. Well, Monday's gap, Friday's close. That's a minimum, and that's just a small pullback target. So I suspect that gap will be backfilled this week. And as soon as we break this trend line, that'll probably be the catalyst for a minimum of gap backfill, and possibly a little move. There's not a lot in the charts. I mean, the weekly and daily charts haven't changed, but there's been a persistent bid under the market, and again, nothing remotely close to any sell signals, at least for the past couple of weeks now. But when these wedges break, there's certainly the potential. I would say my preferred target right there, if we get a sell signal on all of these indexes. I want to go over the futures as well. You got to watch them all. And my favorite is still IWM. Members, I posted that chart on RTY and IWM. I'll get to that in a second. Posted that earlier today before the market opened, but they were looking at least about a 1.6% pullback, roughly from where we closed. And if we could certainly get more. Everything's getting frothy right now as far as low short interest. Bullish sentiment continues to spike. Bearish sentiment continues to extract. We're hitting some extremes, and usually from these extreme periods of low volatility, you get the Bollinger Bands compressing. Volatility is low, and that's where you can get some sharp moves. So that's what you need to watch for. Not just one, but all of these. Even if you trade only SPY, you also want to watch QQQ. This is what it looks like here. Here's your uptrend line. Again, coming off the early December 3rd lows right there. This is just a divergence line. Divergence lines are not, although they're technically a trend line, it's not a trend line as far as price. They could be moved. They're really just highlighting the divergences. So and mainly looking at down below. If you look at the top line on the indicators, that's the PPO. This is the divergence line we're looking at now. So, there's certainly room to continue to walk up. Maybe this morphs into a price channel. Maybe it breaks down. We don't know. We'll just have to wait and see. And as I said, divergences aren't sell signals nor overbought conditions. We certainly have those, but they are an indication that a trend reversal is likely. So these are our current divergence lines. It could really go from this point right here on the RSI. And again, whether it turns out to be a price channel, turns out to be that, or the divergences get burned through, that is yet to be seen. But what I can tell you is a break below this trend line is most likely to trigger, again, at least a backfill of that gap right there. and quite possibly more down to any of these near-term targets. And of the indexes I follow closely, IWM stands out to me. I haven't even marked this one up, but there's that trend line. You can see it again, nice and clean. Nice clean wedge. Look at this price compression. Look at these little tiny candles, and again, from those small price compression, that's usually where you get the moves, but again, you need a catalyst. Now, when you look at the indicators here, you do have divergence, but they're really flattening out because of that price compression, so I'll draw the divergence line. But what stands out to me really nice is the RTY, the stock Russell 2000 futures. And let me cue up that chart for you here, RTY. There it is. This is a 60-minute chart of RTY, the Russell 2000 index futures, small caps, and it's just a very clean, well-defined uptrend line, a lot of reactions, and like I always say, 60-minute chart. So what you want to see is not just a brief pop through there. You either want to see for a sell signal, very impulsive break. If you're 30 minutes, 20, 30, 40 minutes into that 60-minute candle, you want to see it way down here where it looks like it has a little chance of recovering, or you wait for a solid 60-minute close below, and that would be your sell signal. You do have support right here at 1659, roughly 1659-ish. And as I said earlier today, you want to see the large caps break down as well. You have ES. You have I've color coded the lines here on ES. You can see the levels. ES are the S&P 500 E-mini futures. Nice clean up trend line right there. There's your divergence line. We continue to diverge. And as I mentioned recently, it's not just that. We have the divergences, of course. And again, just to continue to reiterate, because sometimes I don't think people get this, that we don't have sell signals yet. We just have these technicals forming right here, the same kind of setups that we've had in the past. You can see this chart right here. This 60-minute chart goes back a couple months here, and you can see we've had now 1, 2, and that was actually extended there, and now 3 divergent highs so far. And each one, you can draw a trend line where you get a sell signal. This was a trend line here, and they were, we're in an uptrend, so these are pullbacks. There was that in ES, we did a bearish pennant right there, broke down, and that was the last time we had a sell signal right there, and that's where we're at now. So with ES, you can see we have not just the uptrend line, but just below it, we have a pretty nice support level right there, 31. We'll call it 31.90. You can round it down. So I had that line at about 31.8975, and you can see it's just a real nice support shelf. Prices we found, ES found resistance there, and then since then we've been testing it. So what you want to see is a break at that level, and with the horizontal price support in such close proximity, the safe bet is to wait for that. You could always take a starter position, and again, I'm talking for a quick short pullback trade. This would be my minimum target right here, and I think there's a good chance we come all the way down here at about 31.34. It's not a huge pullback. Again, on the indexes, we'd be talking about a drop of about, what is that, 2.3 or so % on ES, and let me remove that, just measuring out there. And on NQ, we're talking, if we get the sell signals there, NQ is way up above there. You have a little minor trend line here that could spark a move down to that. And if so, my preferred pullback target is also about 2.2 or so % from where we're at right now as I do the video. This will change overnight. These are the futures, and they're going to do whatever they do overnight into tomorrow morning. But again, you want to see this level go, and then just below that you have a comparable support level, comparable to that support level on ES that I just showed you right here. And I like to use the futures because it tells the whole story. When you go to QQQ and SPY, you're getting only a partial glimpse of the technical picture. This paints all the transactions between buyers and sellers virtually around the clock, other than when the futures shut down on Friday night and then open back again on Sunday night. They close them for the weekend. They trade virtually around the clock during the week, so you can pick up trend lines, support and resistance, price levels, and things like that you may not pick up on SPY and QQQ. And again, these are the levels I'm watching, the most salient levels, 85, 94 roughly right there on NQ, and then this uptrend line here. This is just a minor uptrend line. Again, that could spark a move down there. And then when you break that, it depends where you break it. Let's just say we continue to work higher for a while and we break it up here. Then at that point, for a quick pullback trade, that would be my first price target. But if we were to break down overnight or tomorrow early, you have that level in close proximity. That's the level you need to wait to see go. So I think once that level and the comparable level on ES get taken out, if it happens soon, especially with these divergences still intact, then that would trigger a near-term sell signal, like I said, for those pullback targets. It could certainly morph into something more, assuming we get the sell signal soon, or maybe we just continue to walk higher for now. And if that's the case, we'll see if these divergences are burned through. As I mentioned recently, we've hit some extreme overbought readings. I have a RSI level here marked at about 86.72 on the RSI 9 setting on the 60-minute chart of NQ. And what usually happens is when you become overbought to that extreme level, sometimes you get a one and done with a correction. And then sometimes what happens is, quite often, you'll get a second overbought reading at a lower level, and that's what gives you the negative divergence. So right here you had at that point, you put in negative divergence, then you made an equal high, but you continue to make lower highs on the indicator, and that extended the divergence. So you can see the three biggest corrections that we've had in months right here all came after those divergent highs, and with these extreme overbought. And there's a little one right there too as well. Hit that level, right? That's 86.70 level. Went on to make a marginal new high right there. Boom. And then boom, here was that beautiful bear flagging action a couple weeks ago right there. There's your flag pulse will move down, bear flag, and it played out perfectly to the measured target. And that was from a small divergent high. Now this one, the scope of these divergences right now, should they play out soon, we get a sell signal, are more comparable to these divergences right here. See, small divergences typically give you a smaller pullback. Not always, but typically. Larger divergences give you a larger pullback, etc. So again, there's a potential here. You want to see boom, boom, break of that 85. You want to just play it safe and look at one number, 85.94, and that should open the door up for, I think, at least a move back down to 84.85, and possibly more. Well, again, we'll see the nature if and when we even get it triggered. Otherwise, we could burn through these divergences. I've heard the term melt up top lately, and it's not that. Again, going back to the index charts, this is not, at least I've seen melt up tops in stocks and in the market. Again, we've gone up now since we broke out 6%. So we're only 6% above where we were back in the early July right there at that previous high. And again, just from the look of it, these are small candles. Melt up tops typically have much larger candles, much more impulsive buying and price action. This is just kind of a slow and steady grind up, and it's also part of the seasonality. Typically in December, last year was an exception, but usually December you get that grind higher at the end of the year. Trading volumes drop off. There's not a lot of short sellers in the market then. There's year-end tax, buying and, tax squaring off in positions and some buying and shuffling. So we'll see what happens. But again, not much new to report. Technically, even when you go to the 60-minute, nothing on the daily charts, and when you go to the 60-minute charts, again, there won't be any significant developments until and unless this trend line breaks right now, because the trend is currently up. And so that's it. We'll wrap it up here. Like I said, that's that RTY has the cleanest uptrend line, a little support below, minor support, and that should we get a pullback. And again, this is only going to go so far. Most likely, you're probably not going to see RTY or the small caps or IWM pull back too much unless those large caps also break the support levels I just showed you. And if so, that's your pullback target on RTY. You're talking at least, roughly again about 2% or so there from where we're at right now. And again, if we climb higher, maybe we'll be looking at a price channel, or maybe even see those divergences burn through if we don't trigger any sell signals anytime soon. So we'll wrap it up here, and if we get any significant developments in the market, I will do an update tomorrow. Otherwise, we'll just focus on things where we have better opportunities to make money, like coffee and crude oil, natural gas, energy stocks. There's a dozen things out there that have done instead of the market doing 6% now over the last 6 months, we had, our coffee short last night was up 5% in less than 24 hours. We made 5% on that after turning around and, closing out the long for, well into the double digits gain. So those are the things where you just have better risk reward opportunities and better, much higher profit potential than the market. It's hard to really extract profits from a market that has no volatility when the VIX is down at, its low end of its range. All right, let's wrap it up here, and we'll see what happens tomorrow. And if nothing much, and I'll probably do an update the following day. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.